Hello, everyone. Welcome to another morning edition of Trading Bitcoin with me, your host, Tone Base. Like I said, while Bitcoin is being so volatile up and down, I want to try and bring you these videos morning and night. We'll see how long I'm able to do that. Last night was great. Went out to the Laker game. That was pretty fun. Thank you for the tickets. You know who you guys are. And all right, let's go straight to screen share. I don't want to. I actually want to make. I also want to make this video a little short. Um, it's funny how people continue to say my videos are too long, and they're asking for other people what I had said, whether to buy or to sell. So, I mean, that's like the worst thing you can do, right? So first of all, you should never trade on my advice, whether I say buy or sell. You need to learn how to trade. Second, you're now relying on other people to tell you what I said. So this is like a terrible broken telephone, which will cause you to lose all of your money if you're trading based on those calls. This is an educational channel, which is why I encourage people to go to my website, Liberty Life Trail, educational tools, and find the part that says learn trading. Sections 1 to 5 are traditional trading, is very, very important. Those numbers you see all over my candles, that's fully explained in section 6. So please click on all of these links. They're all very important so that you can better understand what's going on with section 6. All right. For additional information, please check out the consulting section of my website. And if you want to attend one of my trading seminars, I'm doing one tomorrow, but it's fully sold out. Other than that, Washington, D.C. or New York later this month, San Francisco in April, and there will be one or two in March. I just haven't gotten around to finalizing those yet. Okay. And here's a preliminary schedule for the rest of the year, and then we'll see what happens. All right, guys, let's. Oh yeah, you know what? I'll mention the traditional market briefly. So let me go ahead and do that. I already have 750 live viewers. Yeah, these are the pictures from the game last night. The seats were pretty damn good. I think it was the closest I ever sat at a game, so that was awesome. Also, I think Staples Center is way smaller than Madison Square Garden, which is where I usually ended up in watching games. So traditional markets. So I don't know who you are, but thanks for pointing that out. So Tom DeMark himself was on Bloomberg talking about how today is a potential buy point in the stock market because, well, I'm gonna pause it, but you can all go to my Twitter. And the reason he said that is because of this. So today is a 9. Now, this candle looked a lot better earlier this morning. The market is now falling, which I did have one traditional position. Let me see if I managed not to dox myself. So I managed to not to display my account number this time, thank God. Found a way around that part. You know what? Let me just make sure. Let me make sure I don't dox myself. Yeah. Right, I can do that. Okay, good. All right, let's go back to video. So before I get to Bitcoin, I know you all want Bitcoin. So traditional markets are, I mean, that's a big fall. It's a big fall. It's a good buy. There'll be a buy the dip soon. I mean, nothing goes down forever. And you're coming up on the 200-day moving average, which in a way is pretty good, actually. Hitting the 200-day moving average is usually a good sign. You do have a 9, but you do want to wait for signs of a reversal. Now, in a way, perhaps I was impatient this morning with my traditional trade. Now, let me show you. Okay, I fully exited my trading position at a price of 14. My average price was 13.95, but 14. Right now, I could have exited this position at about 24. So that's a big difference right there, right? Because you can also see the quantity of 10. So that's a difference of $10,000, right? So there's no timestamp, right? So I exited this position about 2 hours ago, I think. And if I hadn't exited that early, there could have been an additional $10,000 gain. But that's okay. I'm okay with that, right? Because here's why. So in my traditional trade, and I showed this to you guys earlier, I think about a week or two ago, right? This is a very complicated trade. I try to, eliminate all identifying marks. I cannot tell you the name of the stock. What I can tell you is the dates and even the position size, right? Trying to blank out my total account value, but a smart options trader can back all these numbers out. It's just not that easy. So I'm not going to go over my entire trade. Please go to like the older videos to do that, right? But again, if you're an options trader, you will see that I've broken up my one trade. It's all in the same stock, broken it up for liquidity purposes, and I entered a spread 3 different times, at 16, at 11:30, and at 7. Positions were different. This was the big one, right? It was the most expensive, and it had the biggest position size. Middle of an expense, and second biggest position size, and the cheapest was a small position size. You can see that I exited the first one at 20 and at 1950, but that was the majority of the exit. I believe the other exit was like at 17 something. Like I don't really remember at this point. You might want to check out my other video. I also exited that middle trade. I forgot at what price. I think I even exited at 15. And then the rest, I wanted to exit at 13. And when I didn't get filled, 10 positions were left over through the weekend, which I was not supposed to do. That was a screw up on my part. Like I did not want to hold this trade through the weekend. This was going to be like through the second weekend. This was going to be a 1 week trade. That's it. That was the plan. So I kind of screwed up my own plan, but that's okay. And the bottom trade was also fully exited. And you can see the exit at like 850, but I think the first half was exited around 10 bucks. So I then looked at the spreadsheet, and remember, it was the 3 positions, right? So the first one was entered at 16. Second one was entered at 11:30. I'm just going to round just for the hell of it. And the last one was entered at 7. Again, I'm just going to round. So I'm pretty sure that and the last one position size was 10. The middle one position size was 20. And the first one position size was 30. Delete that, enter that. Okay. There it is. Okay. So now I exited. You can see part of it at 20 and 1950. So let's say 1975. 1975 is the middle. Oh, I did 15 and 5. So it really is closer to 20. I'm going to round up in my favor. Close to 20. So 20 of them I exited at 20. And the other 10, I believe I exited at around, I'm going to say, no, it would have been more than 1750. I wouldn't have taken that little bit. I'm just gonna say 18, right? Like maybe I'm lowering my my actual gains. So the big part gave me a 24% profit. The middle trade, you can see in the screenshot that I exited a portion of it. Oh, actually, on the screenshot, you don't see where I exited at. If my memory serves me right, I exited at 14 or 15. So let's split the middle here, 14 and a half. I exited half that trade at 10. And the other half, and that's what I wanted to show you, I exited this morning at 14. Okay, that's the part we're going to talk about for a minute. I exited this morning at 14 for a 27% gain. Okay. The final part, you can see that half of it was 850. That was that Thursday. And the other half, I'm pretty sure I got 10 out of that. No, 5. So that was about a 20, maybe I got more than 10. I don't remember, but that was like a 20% gain, 27% gain, and 24% gain. Now, I was supposed to enter my entire, this is my retirement account. I was supposed to enter my entire retirement account into this trade, right? So had I entered my entire retirement account into this trade, this would have been about a 22% gain on my entire portfolio in 1 week. In 1 week, okay? Now, I will not get to make another trade till 3 months from now. This is a very specific trade. It's a very complicated trade. And I was also showing you in other old videos from like a week ago, that's old, I guess now, since so many videos I make, that I was the only market, like I was the only one running this combination of options, which is why I have the confidence that I can put my entire account value on this trade. And remember, that I did this in the most volatile environment possible because this trade was so hedged with such leeway that I wasn't like, the current market environment actually the last 2 days really helped my trade. So here's the thing, right? So this was the part. Let me make this yellow, I guess. This was the part that was tricky, right? Because I wasn't able to exit it at 13 at the time, and I was supposed to exit like this. Why didn't that update? Why didn't that change? Oh, it's not even factoring it in. Why isn't it factoring it in? Is this factoring it in? It's not either. Okay. That's not good. These numbers are. Oh man, that sucks. Oh, wait. Yeah, it's really not factoring it in. Oh, that's kind of useless then. So I need to do it this way. I need to do my own averages. So I sold all 10 of this at approximately 925. Okay, so that's better. So that means I sold all 20 of these. Gotta redo my spreadsheets. I see. I don't even keep track of my own trades. Like I know what my trades are. I know I make money on every trade. Like I don't need to. Like I'm not even sure why I'm trying to prove this. Like I don't even keep track of my own real life trades for my own purposes. So I was supposed to exit this entire thing at approximately 14, and I exited this entire thing. Let's say 19. Let's do that. All 30 of them. Right. Though that was definitely higher. So either way, right, my entire trade was going to give me at least 20% on my entire portfolio. If I had put in the entire portfolio, I actually didn't put in the entire portfolio, right? I put in the majority of my portfolio. So I ended up making 15% on my entire portfolio well, I finished my exits today, right? So technically it took 2 weeks instead of 1 week. Now, at some point 2 days ago, this was going to be a losing trade. Because right now, as you can see, I sold it for 14. Jesus Christ, it would be worth so much right now. I sold it for 14 this morning, and I was happy. I made good money. I didn't want to risk it with the 9 there. Like I just didn't want to risk it. But 2 days ago, this probably would have been about a 5. which means that would have been a losing trade. I would have lost half the money on that trade. Okay. Well, maybe not a 5 in total, right? It would have been a 5 on that. So it would have been about an 8. I would have sold for about an 8. So I would have lost like 30% on this part of the trade. And then I would have made 30 and 18 for a total gain on the trade of about 10% and a portfolio gain of about 5%. This morning, when I was able to sell at 14, half of this, I took down the entire trade for at least 14.50, if not higher, giving me a total portfolio gain of 15% and 20% on the trade. Now, had I waited till just now and sold it right now, I would have sold half that trade for 30 bucks, right? So if I would have continued to wait for like 2 more hours, this shows you how volatile my positions are, guys. And I'm confident in putting my whole account on them. If I would have waited till just now to sell that other half of the trade, that would have been the first half got sold for about 15. And the second half would have gotten sold for 30. So you divide that in half. So 30 plus 15 divided by 2. So 45 divided by 2, that's about 22.50. But I would have sold for about 22.50 for about 100% gain on that particular trade, bringing my entire portfolio gain in the 2-week span to probably about, I don't know, 25, 30% gain on my entire portfolio had I done that, right? I mean, that's, again, it's an extra like 10,000 bucks, right? So that's real trading. That's real trading in the real stock market, right? As volatile as it is, okay? It turns out that my position was so hedged that with the crash in the market, my hedge was making me a lot of money. But I took it off this morning. All right, this is probably a longer explanation than anybody needed to hear, but there it is. So I have officially exited all of my positions in the traditional markets. I am done trading traditional markets till 3 months from now, next earnings season. Okay, and let's see where the markets are at that time. All right, let me minimize this. Let me minimize that and minimize that. All right. So as far as traditional markets go, watch this very carefully. It's very possible that we're bottoming right as I speak, right? Because again, we topped on a 9, my 9. Wall Street didn't have this. This is my version of the traditional indicator, and right here there's a kiss of the 200-day moving average, and you have a 9. So at the least, we are going to look for a 1 to 4 day bounce and then reevaluate. Okay, so let's see what happens. So that's 1, 2, 3, 4. Right. Let's see what happens. All right. Let's get to Bitcoin. Here's Bitcoin. Here's the weekly chart. Well, yesterday, when I did this video last evening, the weekly chart was looking a bit weaker with a lower close. However, it's still working on that reversal candle. Monday is going to be really, really important. Based on traditional trading, you really need to start trading the week after a hammer higher than the hammer. That would tell you that the bottom is most likely in, and we're ready to go back to new highs. Okay, so that's that's one of 2 things I'm waiting for on the weekly chart. A new weekly intra-week high. The other thing I'm waiting for is a price flip giving me a green 1, and then the following candle trading above that 1. Okay, so that's when the weekly chart actually goes bullish. Or the weekly chart would have needed to get to a 9, and then you can get bullish early. All right. The daily chart is where all the action is. Again, last night when I was doing this video, we were literally sitting at the bottom of this candle, which was in the vicinity of 7,800 or so, around that time. Okay, so I had said that, hey, let's see how it goes. And then the following candle, which starts in about 7 hours, if it starts trading above this candle, you have a bullish entry. Now, over the last 12 hours, we have seriously reversed. And now you're in a situation where a green 2 is starting to trade above a green 1 on the daily chart, coming off a 9. Now, remember, a 9, the most likely scenario of a 9 is a 1 to 4 candle bounce followed by a reversal. Okay, so we're somewhere in the middle of that for a potential reversal back down. So this is a pretty tricky situation right here, right? So on the one hand, you are getting signals that you can go back into the bullish trade. On the other hand, you have to be a little bit careful. Now, you still have mounting resistance. You have the $10,000 resistance. You have the $11,000 resistance Fibonacci. You have the declining 50-day moving average, currently at 12,200. It'll be at 12,000 or below by the time we get to it. And the 13,000 horizontal resistance. And then you have another Fibonacci up here at 14. So you have a pretty big chunk of resistance you need to get through. Now, realistically, you want to get through this resistance as slow as possible. You want this stuff to start to consolidate as it busts out. If you go up too fast, you could leave gaps on the downside. Okay, so at this point, because we already had the big volume spike, you just want to consolidate at these levels and then break them violently. Okay, so right now we're consolidating around 8,500, which is pretty good. Okay, let's look at the 4-hour chart. So the 4-hour chart, again, this was the situation we were looking at last night. Looking at the live chat. Somebody wants me to look at TLT. I can glance at TLT. So this was the situation last night we were looking at here, and we were starting to drop. And I hope you guys remember what I said. I said we need an immediate reversal, because if we were to get to this yellow line, if we were to get to the $7,500 line last night, then things could have gotten ugly and we would have dropped. And then if we would have gotten back to this line and not reversed somewhere in the middle, then this would not have held and we would have dropped. And then if we would have gotten to this line, it would have gotten really ugly, right? So this is what I mean about support is only support once for real strength. After that, it becomes a bit weak. So therefore, if you're entering this position and the 4-hour chart has also given you a bullish signal to enter. Again, if you're trading like I am, though I'm not actually trading, how I would be trading if I wasn't doing videos, the bullish trade was right here. How many hours ago was this? So this candle started 2 hours ago. So about an hour ago, you had a green 2 trading above a green 1, giving you a 4-hour bullish entry. Now, where's your initial stop loss? Your initial stop loss would be right here below the swing low. Now, I know that's a wide gap. I understand that, okay? Which is why if the next candle gives you a higher high than the current candle, you can at least raise the stop loss to there, probably raise it all the way to here, right? All the way to 8,200, right? Keep the stop loss just under the 50-period moving average, Also notice how we broke the 50-period moving average, which is significant, because last night when I was doing this video, I was talking about how the 50-period moving average is rejecting your price. So the moment this candle closed right at the 50-day moving average, and then the next candle was able to open and close above the 50-period moving average, sorry, not 50-day, 50-period of 4-hour candles, boom, you shot up the current candle, right? So again, this is great bullish momentum. So you can see how the 4-hour chart is very clearly bullish. The daily chart is just turning bullish. The weekly chart still needs a few more weeks to officially go bullish. It's been bearish for quite a while. So the 4-hour chart is right here. This was your bullish trade on the 4-hour chart. And I would probably even raise my stop loss already to this. And if we get a new high on the next candle, I would probably raise my stop loss to be a break-even trade so that the trade doesn't cost me any money. Okay, that's how you trade. Hourly chart. So the hourly chart, wow, that's beautiful. When did this happen? So this happened at midnight Eastern time. So that means I would have been at the game. I would have been, yeah, I would have been at the game last night. So midnight Eastern would have been 9 p.m. Yeah, that would have been 9 p.m. here in LA. So this is why, again, this is why I'm not trading, because I kind of want to enjoy my life. I don't want to sit in front of my computer 24/7, right? So you can see this doji candle with a nice green arrow. Like, ironically, you have the red arrow right here. This one didn't work out as well. But there was another 13 count in the background, which never actually got to a 13. You have a plus sign. A plus sign is itself a 13. But anyway, just read the documentation, guys, on my website. It's in the Learn Trading section on my website. But anyway, so this red arrow gave us the top. This green arrow gave us the bottom last night, midnight New York time. Nice doji candle. Where is the entry? Well, the premature entry, but totally doable, was, of course, the moment you start trading above the doji right here at a price of 79.35. Your initial stop loss is below the swing low, which is below the doji. Once you start trading above the next candle, you can raise that stop loss. And yeah, this is why this is an educational channel. Raise the stop loss to just below the prior candle. You can see how the stop loss was never actually hit. Your trade did go negative, so it scared you a little bit. Wouldn't blame anyone for getting out. But technically, you should not have raised your stop loss to break even that quickly. But if you did, that's fine. That's a profitable trade. You had another bullish entry or a double down if you were still bullish right here once the 2 started trading above the 1. This trade gave you a potential exit right here on the 9. However, because it's an orange arrow and not a red arrow, that means the 9 wasn't actually perfected. So it's not as strong of a sell. In addition, you can see right here that you have your moving average crossover. There's a lot going on here, guys. A lot. Boom, right there. So ideally, I always want to see the price go into the cross and then bust out of the cross. So this was not my ideal buying entry point here. But the 9 wasn't perfected. Also on this 9, I would have looked for a 1 to 4 candle correction, then back up to new highs. Of course, that didn't happen. We went straight up, right? So if you are a very aggressive trader, which I probably would not have been in this case, you could have totally entered the bullish trade right here. Though, like I said, I myself probably would not have done it, even with this large volume. I would have probably been long in this area based on my trading style, but I probably would have been a little bit hesitant here And I'm still a little hesitant on this hourly chart. However, the 4-hour is now bullish. The daily is turning bullish. So I might take a very small position on with the chase literally right now. Just chase that upside because I have a 2 on the verge of trading above a 1 and after a 9. So now I look for yet another 13 move, right? So what am I looking for? You see this 2 right here? That's kind of like this situation. Like, in fact, it's very similar, right? Like, look at these, look at the similarity here. This is the 1-hour chart, right? Look at the similarity coming off of this 9 here. And again, you can see how at the time, like this is my stop loss and this is my entry. And you can see how the stop loss was basically held. You can see how the stop loss actually held throughout. Okay. And your exit would have been right here on the bullish 9. Though this red 2 and red 3 candle probably would have gotten me a little nervous. Right? You can see another bullish entry here. I would have done that live on camera. And this is the one I just showed you. But you can see the similarity here, right? Like you had another green arrow pointing to the bottom. You had your potential exit here on the 9, a 1 to 4 candle correction, then back up. And you can see we went back up all the way to a 13. So this would have been a nice trade on the hourly chart. These 2 red arrows would have also told you to be very careful. And you can see how they pointed you to a decent hourly pullback. We're in a much stronger situation right now because of the bullish moving average crossover. Once again, we had a 13 mark in the top, an aggressive 13. Yeah, this code is going to be released soon to clients. And this green arrow did a nice job calling a swing low. And this 9 arrow is giving us a little bit of a caution flag, but hey, we're going up. So I see this 9 red arrow similar to this 9 red arrow gave us a little bit cleaner. Like I really wish that these 2 candles, the candles that took place on at 11 p.m. at midnight, sorry, 11 a.m. and noon on Eastern time on February 6th, for those of you that are watching, not listening to just the audio. I really wish these 2 candles were the 2 candles that took place off of this 9, setting us up for a move down into the moving average crossover, and then boom, swing up. Okay. Now this is what I drew. This is automatically drawn by the code as a stop loss off of this 9. The code is way more generous with their stop losses than I am. That's pretty much it. Let's glance at the S&P 500 again. You can see we're bouncing a little bit as far as my position goes. Yeah, so it's not as lucrative as it was earlier. At one point, I sold this at 35, for God's sakes. I sold it at 14. Let's see where it is by end of day. But still, if I would have been a little more patient, I could have definitely turned my 15% portfolio gain in 2 weeks into a 20% portfolio gain in 2 weeks just by holding out an extra 2 hours. Option trading is incredibly leveraged, guys, if you know how to use it properly. Very, very advanced stuff, though. All right, TLT. Somebody with a tip wanted me to look at TLT. Let's go ahead and do that. TLT daily. Let's do that. So TLT is the 10-year bond ETF. Oh, wow. So look, the last time I looked at this, I drew this red arrow, and that turned out to be insanely accurate, right? Now, why did I do that? Look at this red line. Again, my trading style is the same, whether it's Bitcoin, whether it's bonds, whether it's stocks, whether it's gold. It doesn't matter. I drew this red line, and I said, hey, the moment we go below the swing low, No such things as double bottoms, guys. I keep telling you, I keep trying to teach you. And then people still reply to me on Twitter, on YouTube. It's a double bottom, you gotta buy. No, it's a double bottom, you gotta sell if you actually want to make money. All right. So I must have drawn this red arrow a week ago. Please go back to the last traditional market video. Again, ideally, I would have wanted to see the price of TLT move into the cross, and then fall. But hey, not everything's perfect. So that turned out to be, this turned out to be way sooner than expected. But look, so the moment we're crossing this red line, I'm the biggest bear of bonds on the planet, right? Because no such things as double bottoms. All right, you minimize that. And you can also see, based on the random number generator, as kids like to call it, the moment the 2 started trading below the 1, boom, short trade. And you're below the swing low, okay? Boom, you're done. You're shorting this puppy. Or buy the short equivalent of the ETF, right? That's like the reverse of TLT, which is the short bird, which is the one that makes money on when bonds fall. So TLT is going down, okay? So usually when bonds go down, stocks go up. So this means that we're in an environment where stocks and bonds are both falling. That's very rare. So you can also see that we got a 9. So what does that mean? That means that I'm gonna adjust this arrow because like I got it right. I just got it right way sooner than expected. So I gotta, I don't know what to do here, guys. Like I don't want to change revisionist history either. But at this point, I gotta draw a green arrow here, right? Like I have to. At the least, I'm looking for a 1 to 4 candle bounce, probably back to the breakdown levels. So now my arrows are crossing. I'm just gonna delete this. You all know it was there. I got that one right, and then probably back down. I really think the stock market is gonna rebound back to new all-time highs. Yeah, so I'm not sure what else you wanted me to look at on TLT. So TLT doesn't normally fall with the stock market. They're usually inversely correlated, or negatively correlated, I should say. So therefore, something is going to have to give. Either bonds will continue to crash and the S&P 500 is going to reverse, or the S&P is going to continue to crash and bonds are going to reverse. Okay, something is about to give here. I think that the stock market is going to reverse and bonds are going to keep falling. So we'll see. I'll try and give you guys a traditional market video soon. Let me take a look at some of the stuff a little more carefully on my own. All right, next. Yeah, of course I believe in boom and bust cycles. I still think we're in a boom cycle, guys. I mean, I'm not fully sure why the stock market is falling because again, I haven't had time to do all my proper research. I don't see a stock market crash this year. I just don't. So we have a 10% correction. It's not the end of the world. I'm waiting for my reversal candle. Let's see what happens on a back test of the 50-day moving average. Again, if you back up the stock market, let me take this away and put that on. Stock market went a little bit exponential there, right? I mean, so you can still see the 9s right there. Boom, 9, boom, 9, boom, 9. And look at this, 9. Right, I know this is a little cluttered. Should probably take a look at the weekly chart of the S&P 500 too. So look, the 200-day moving average has bounced the price back in June of 2016. It bounced the price back in November of 2016. I was expecting us to get back to the 200-day moving average in September of 2017, but we never did. Instead, we went exponential, and now we had a big crash. So it's possible that it's over. Look at your RSI. Your RSI crashed to bearish, to oversold. Look at the last time the RSI was oversold. Look at the strong rebound we have. Okay. Now I was very confident that we were going to go to new all-time highs back in 2016 because we spent way too much time at the all-time high at the time, back in the summer of 2016. This time around, you can see how you only had 1 day to sell the top right there. And then, boom, we had a bearish harami. Learn what that is. And then on Monday, no, not Monday, sorry. This was Monday. Monday was a bearish harami, and the next day it all collapsed. So I would have rather saw a shooting star here. Like, normally when things close at the all-time high, it's not how markets top, but in this case, it's very possible. You still only had 1 day to get the top. So it's possible that the stock market will give us, a 20, 30, 40% correction, but I just don't feel that it will. We had way scarier situations in 2015. And especially in 2011. I remember this. Oh man, do I remember this. I traded through this. This was a rough environment, guys. Back in 2011. And again, love the nines. Just love them. See, look at that. Look at that top candle right there. Helps you out a lot. Look at that bottom candle. Helps you out a lot. And then boom, look at that 9. See this giant candle, the 9, and then boom, we reversed. And because we were flat, this is back to 2011, guys. Same thing. No such thing as double bottoms. See this? Sooner or later, it was going to crack. 1120 on the S&P. 1,120. And it cracked. Cracked for a day. And then boom, we went up. All right. So 1, 2, 3, we crashed. Would have assumed a bigger loss, but market kind of, I was way more bearish here. I was very bearish. I thought we were going to go back to like new all-time lows. And then boom, we reversed. All right. So keep that in mind. That's the S&P. We got to be short-term oversold here. There's got to be a bounce. There has to be a bounce. What is this? I don't know what that is. Oh, that's the line that I said we're definitely crossing. Okay, that's fine. Should probably delete this so there's not in my way. It's old. Very old. We gotta be bottoming here. We have to. We have to. I would try to buy this dip right here. Because you know where your stop loss is. Your stop loss on this buying opportunity at the 200-day moving average is very easy. The moment you make a new low. But you have huge potential. Even if it's a dead cat bounce, you're still looking at a move back to the 50-day. You can totally time this dip right here on the S&P. Totally. I like it. All right, next question. Oh yeah, the boom and bust cycles. Yeah, I believe in them. I still think we're in a boom. Look at Amazon. Look at Google. Look at Apple. Still think we're in a boom, guys. How much leverage is in the options trading? From very little to infinite, right? It depends how far out of the money you go. Yeah, there's lots to learn in options trading. I'm not really getting into, I mean, my hands are full educating on the basics of trading. I really don't have the, I don't have enough people that I'm willing to teach option trading to. You literally have to be a trading survivor for like 5 to 10 years in order to really start to get into options. Yeah, I mean, the boom and bust will always come, right? I mean, that's why we have recessions. I still think we're in a boom. I mean, look, like the robots are coming. They're coming for your job. I still think we're in a boom. All right, I don't know what to do with this, right? I don't know what the Squeeze Kings team is. So it's inappropriate for me to send them any greetings. I know you contributed to me saying that, but I need to look it up. I need to Google it. But I'm not going to Google it on live air. Let me stop screen share. Let me go to Q&A. Oh, there goes the idea of a short video. Next. Can you make a case? Can you make a case if the 8,700 is a bull trap? We did break out of an ascending triangle on the 1 hour chart. Could you please take a look? It doesn't look like a bull trap yet. No, it really doesn't, right? Because here's why. I have to go back to screen share. Look at the 1 hour chart. Look at this. 1, 2, and now 3. We're at a triple top with a higher low, right? So you went from a swing low, higher swing low, higher swing low, boom, 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 right? So this is the 1 hour Bitcoin chart. And give me 1 second. I mean, if this was a smaller one, this was a smaller dip, I would have said it's a cup and handle. And you have a movement, and you have a bullish moving average cross on the 1 hour. Look what happened the last time you had a bearish moving average cross on the 1 hour. This, however, was tricky right here, right? So this could have been your little bull trap. Looks like we're breaking out. And then we fell. No, it's a better environment right now. Much better environment. It's definitely not a bull trap. I have a whole video explaining the difference between the bull traps and just lower highs. This is definitely not a bull trap. If anything, it's just an unsustained reversal, but everything is looking good. The daily is looking good. I mean, the bull trap, you can't have a bull trap at this point, right? The bull trap was here. That's the bull trap. The only place we could have a bull trap again is here at 18,000. If we get above this high, but if we get above the high on January 6th, which took place at 17,200, and we go into the 18,000s, but not make it to 19,500, not make it close enough to the all-time high, that would be the bull trap. Up until then, it can reverse at any point because you have mounting resistance. It's a tricky situation, guys. It's not easy. It's not easy. And what I know is if we get back to 5,000, 1,300 is the most likely outcome. And we're still in grossly overbought territory here, right? Look at my channel. This was an amazing channel, and we're way above it. Like, ideally, I would have wanted us to be in the $3,000 range right now. But hey, we're all the way up, so it's fine. Next. How many millions needed to enter the crypto market to push the market cap by billions? Not much. Remember, only 10% of all Bitcoin is actively being traded. So I don't know, probably 50 million will move the 50 million bucks will move the Bitcoin market cap by billions. Easy, easy. Next. Where do you go to learn about options trading? I honestly don't know, guys. I don't have a resource for you. I learned option trading from professional traders. Like, people are paying for my class to learn traditional markets. To learn basic trading, not traditional markets. People are paying to attend my full day course to learn traditional trading. I paid lots of money for a similar course to what I'm teaching to learn basic trading. I, however, 6 months later, paid a lot of money for a professional course to learn options trading as well. And I actually started out as an options trader of the traditional markets. I kind of skipped the traditional trading part in a way because I didn't have much money. So I started trading with leverage from the beginning, and it was very dangerous, and I blew up several portfolios while doing it. I blew up my first portfolio shorting buying puts all over the real estate market in 2005, 2006. I was 1 year too early. If I would have learned trading 1 year later, I would have been very, very rich at the age of my early 20s because I was looking to profit so much from the collapse of real estate, but I was 1 year early to the party. So instead of becoming a multi-millionaire, I almost went broke. Or I kind of did went broke with my trading portfolio because I was shorting the real estate 1 year too early. So look, you can be right on the markets and bad on your timing. Yeah, I know I haven't looked at Litecoin in a while. My seminar in Russia is supposed to be at the end of March. I need to double check on that, and it's going to be in Russian. So if you don't speak Russian, you don't want to attend that. It's not going to be good for you. All right. I don't really want to look at Litecoin right now, guys, because this video is really long. I don't know. Let's glance. I'll see if I can make it real quick. All right, Litecoin versus Tether and Litecoin daily. Sure, and I guess Litecoin weekly. Well, the Litecoin dollar value or Tether value, if you believe Tether is the dollar, I mean, it bounced off of your 200-day, gave you a bit of a double bottom on the daily, so I would be a little bit careful here. The 50-day moving average is going down. You have very limited upside, and see, this red line is here for a reason, right? Because I'm sure last time I did this video, I said the moment you go below this red line, it's going to get ugly. And I mean, it didn't get that ugly, but look at this break of the 50-day moving average on the dollar. There's also a red line here telling you to get the hell out the moment you go below this red line. That red line is a bit inaccurate at this point because I probably drew this red line off of this bottom. Obviously, this red line should have been lower to the bottoms of the candles or the bottoms of the wicks. But either way, over here, you were supposed to get out of Litecoin. It was obvious. It was obvious. And again, you had double bottoms here. Just going to keep moving this red line around. Clearly, and look how it acted as resistance on the way back up. So it's all bad. It's not looking good for Litecoin versus the dollar. Even though you have a bullish trade right now, it's just not looking good to me. Here it is versus, this is the daily versus Bitcoin, I guess. Again, not a double bottom, bounced right off the 200-day, which is good. Gave you a bullish sign. You're coming up on a 9, above the green. Well, I guess Litecoin is doing very well versus Bitcoin. Look, I will only get excited about Litecoin if we get above the green line. Until then, look for a 9 in 2 days and probably more downside. You can see how I was right about this arrow. Very right. But then it bounced quickly off the hammer. But last time I did this video, I guarantee you it was the 29th of January, because that's when I drew this green arrow and then this red arrow. So whatever I did on that day, go back and look. Happened 3 days earlier than I expected, but still happened. Got the price target a few days earlier. Bounced violently up. Wait for a 9. See a reversal candle. Probably back down. If you're lucky, bounce off the 50-day. All right, so I'm going to take a red arrow, and I'm going to draw this. And then we'll see, right? I don't want to draw a green arrow back up because I don't know yet. Here's the weekly chart. Weekly chart actually looks decent. You know, this 9 called the all-time high in Litecoin nicely. Oh, not the all-time high, but yearly high last year. Yeah, I mean, it's just flat. I mean, I'm not excited yet. Give me above the yellow line, then I'll be excited. That's pretty much it for Litecoin. All right, next. Wow, a lot of questions. I don't know if I want to make this 3-hour video. I got to prepare for my seminar tomorrow, guys. Let me just glance at this real quick. Binance, I don't know. I don't care. I don't trade on Binance. Guys, this is why I don't trade Bitcoin. I can't deal with amateurs that shut down their exchanges. Man, that's not my problem. You're the ones that want to trade Bitcoin, so deal with it. Deal with the exchanges being shut down. What do you want me to tell you? Do you think Bitcoin will reach new all-time highs in 2018? I don't know. That's why I do videos twice a day now. I don't know. Is BitMEX good for Bitcoin trading? I like it. It's the one I've recommended for a long time. I have an affiliate code. I'll pimp the affiliate codes. I know. I don't care what you guys think. What is considered high volume and how you can calculate it? Well, what's considered high volume is relative to prior volume, right? I mean, there's no such, you can't like here, like if you look at this, like, wow, you can look at it and say, whoa, that's high volume right here on Litecoin. And then you start zooming out. Oh, that's not high volume at all. That's high volume, right? I mean, it's relative. It's just relative to prior volume, right? That's what high volume is. Let's go back to Bitcoin, right? Again, hourly chart of Bitcoin, right? What's high volume? Just keep zooming out, right? Well, clearly that's high volume, right? Because it's relative. It's relative to prior volume, right? Look, boom, that's beautiful. Beautiful right here. High volume. And they're green. Nice, right? Nice. Very nice. All right, next. I mean, yeah, if you want access to the syndicator, please go to my website. Go to the consulting section. It gives you the information you need. Also, if you would like to support my work, please check out the affiliate referrals program. I still gotta, update my Amazon shopping list and somehow talk to Amazon about, hey, can I get an affiliate code there, referral code? Amazon doesn't like me for some reason. All right, next. And you can see Bitmax right here, right? No, I didn't see Roger Ver on Alex Jones. I heard all about it though. I heard every caller was anti-Roger. So Alex Jones learned that he had the wrong person on to talk about, scam coins. Who do you think drives the price of Bitcoin? Traders, you guys. Nah, whales. What's a whale? Like, I don't know the definition of a whale. Most amateur investors are whales in Bitcoin, right? All right, let me finish this up. Yeah, thank you for watching. Someone is thanking me for doing the videos. I mean, Super Chat is, if you have your credit card connected to Google, you can ask a question with a donation amount. That's what Super Chat is. Yeah, you have to use a credit card for that. Yeah. Do you think Bitcoin is going up? Has anything to do with the stock market crashing? No, I don't. I don't believe they're correlated. They're very different investors. And the stock market is like so much bigger than the Bitcoin space. I don't think they're correlated. I don't. I could be wrong, but I don't think they're correlated. Tone, what do you need to see on the 3? I'm not sure what that means. I'm assuming we're talking the 4-hour chart, the daily chart. Let me zoom in again. Look, the daily is on a 2. The 4 hours on a 2. The hourly is on a 2. This is actually really good, right? Because they're all telling you to look for a long trade. Now, granted, if you took the long trade when I started the video, you're down on this trade. That's trading. It's what you got to live with. It like the hourly, the 4-hour, the daily, they all look bullish to me. But the weekly is not out of the woods yet. Not out of the woods yet. So even if you're taking on these bullish trades, they could potentially be short-lived. So you got to be real careful. We also just moved in the last 12 hours. A lot. A lot. Look, guys, this is why I only make 4 trades a year. I time my trades. You got to time your trade. You miss it, you miss it. The time to go long Bitcoin was here, off of this 9, right? This was at midnight last night. At midnight last night, the hourly was here. Sorry, the 4-hour was here breaking out. So the 4-hour would have told you to be cautious, even though the hourly told you to buy. The daily would have also told you to be cautious. But the hourly gave you a beautiful buy signal. Now, you want all of the ducks to line up in a row. You want the weekly. You can wait. You can sit on your ass and don't trade for a month. And then you wait for that perfect trade between weekly, daily, 4-hour, and hourly. And look at some other time frames, right? Like a professional advanced trader will trade the least amount of trades as possible. But those trades are going to be so favorable probabilistically that a few trades make them all the money. I made 1 trade this entire year in traditional markets, and I made about 15% on my entire portfolio. And I should have been more. It should have been more. I didn't do it right. Or even if I would have held it for 2 more hours today, right? It would have been 20%. Or if I had put my entire account on that trade like I was supposed to, it would have been, 20% at my current exit and 25% of my entire portfolio if I would have held it for 2 hours longer. I'm not making another trade for 3 months, and then I'm going to time it again. Okay, that's professional trading. You know, that's professional trading. Somebody might want to inform Ronnie Mose what professional trading looks like. Okay. Now, what I do here is just try to educate. I'm not always going to be right. All right. I think I'm getting tired. All right. Corey, you also sent me some stuff. Or that was from Corey. Hold on. Let me see what Moose sent me. Oh, nothing. Okay, that's fine. All right, guys. I'm gonna call it here. Oh God, there's more tip questions. Do we need to retest the 6K low from the other day at some point in the time frame before we go watch our? Oh my God! Oh my God! Are you guys listening to me? Oh my God! Oh, I don't know how much more of this I can take. Look, I'm gonna say it again because clearly I'm not getting through to people. Here's the daily chart. I guess thank you for the question, Corey, because it tells me that people still don't get it. I'm gonna read the question again. Do we need to retest 6,000 low from the other day at some point in time before we go much higher? No, we can't. There is no such thing as a double bottom. If we go back to 6,000, shit is going to hit the fan so that Bitcoin price is going to crash. See this giant red arrow? This is what's going to happen if we retest 6,000. This arrow is going to happen, right? I don't know where the hell you guys are learning your trading from. You don't get a retest of a low. You only get lower lows, okay? You cannot retest 6,000 again. It almost never happens. It'll happen once out of 10 times, maybe 1 out of 20. I will bet that a huge crash in Bitcoin will happen. And I will be right 90% of the time if we get back to the $6,000 area. Okay? Please, guys, if there's one thing you learn in trading, is that you only get one chance to buy the low and you only get one chance to sell the high. Okay? You will not get another buying opportunity at 6,000. It's either never going back to 6,000 again, or it's going to crash through 6,000 and go way lower. Okay? And you just have to time those trades. All right? So no, we can't test 6,000 again. It just doesn't happen. It happens like once in a blue moon. All right? So I got to be careful with that terminology because apparently you can trade moon cycles. All right. Thanks for that very frustrating question, Corey. I understand why you put it there for me. Please review my videos. I know they're long, but this is what it takes to become a trader. All right, guys. I'm going to turn on the camera. I'm just going to wave bye to you all and see you all on the next one. It's Friday night. I don't know if I'm going out, but I have my seminar tomorrow. So if I'm going out, I'm not drinking. I have to, have a class of 35 people to teach tomorrow. All right. Talk to you all later.